Hello, welcome to the Mychal Raynes channel. I'm Mychal Raynes. Recently I've gotten a lot of questions asking me, is the bull market over? I have some unique opinions on it that I'd like to share, but first there's some things we need to address. A while back, earlier this year, we had a major correction, and I come out with a couple videos on it and admitted that I had moved a portion of my portfolio into cash. And the nice thing about moving a portion of your portfolio into cash is that if there was a crash to occur, then I'd be protected. So I'm coming from the vantage point where for my portfolio, it's not going to matter if we go into a recession or not as much. I'm not short the market. I don't have any options against the market. So I'm not going to profit off a crash, but I'm going to be protected, and I'm going to have some cash available to me to purchase things cheaply. But back to the matter at hand, recently, volatility has reared its ugly head into the markets, and it's stirring up sentiment. And that's what ends up driving price anyways, is the market sentiment. If you have more people buying than you have selling, then you have the price going up. And if you have more people selling than buying, then the price goes down. And it's in constant flux, and it's real time when the market's open. And nowadays it's global. And we're seeing some things that are really interesting happening. If you listen to what the market's saying, we just look back to the flash crash a few years back. The market went down really rapidly for the flash crash. And then we're looking at some of the stocks that have went down recently, and they have moved, some of the big stocks that are driving this bull market have went down rapidly, 20% correction. So a big thing to me is the speed that things are falling, which makes me feel really comfortable about having a cash position, because what's the likelihood if we are going into a recession and things start getting violent price-wise? What is the likelihood that I'm going to be there ready to sell and not look at it as a buying opportunity, and be able to sell? Sometimes when you have these crashes, things sell so rapidly, it's hard to get out of the market. So I've already resigned the fact that I'm not going to be able to time this thing and hop out of the market right at the second that it's at the top, and once it starts going down, I'm going to be out, and then it's going to go down, and I'm going to be I'm not going to catch a falling knife, and when the market's at its lowest that it's going to get, then I'm going to buy back in. And in order for that to work, look at how much has to go in my favor, and look at how I'll have to execute if that was my game plan for my portfolio. A lot of things have to go my way, and if things start going wrong, then I could my portfolio could take a loss. So because of that, and because I've done well in this bull market, I'm not going to let greed control my decision. So I've taken a portion of my money and put it into cash, and I'm really happy with that decision, especially looking at the speed that the market is pulling back and having corrections. It's all happening rapidly when it occurs. But I'm not seeing major crashes widespread through all the sectors. What I'm seeing now is volatility. Doesn't mean that we're having a crash, and it doesn't mean that the bull market's going to just run forever. But it's kind of interesting to me. I made a video a while back about investing in oil, and in that video I talked about that was going to be a big time indicator for me in this bull market. If oil has been hovering around 70, if it drops into 50 range, then that's telling us we're probably entering a recession, and vice versa. If it goes from 70 to 90, right, then maybe we're looking at not only a bull market, but we're looking at some inflationary activities. Another thing to note, the Fed has been raising interest rates, and what is it? 11 of the past 12 recessions have, they've raised interest rates, and that's preceded the recession. So ultimately, these rate hikes are going to break the economy, and they're currently raising, and they're aggressively raising. But the administration has come out and said a bunch of things to criticize the Fed. And this administration has tied itself to the performance of the stock market, so it's kind of a win-win for them. If the stock market goes down, they could say, oh, well, look, we told the Fed it was going too fast. Or if the stock market keeps going up, then they take all the credit. But in reality, that has so little of an impact on this bull market. And it's a historic bull market that we're in. But I have some cash. I'm not looking to sell everything and just be in cash right now. And I'm willing to take a small loss if we do get into more than a correction, because if the bull market continues, I'm going to reap the benefits of that. So by being in cash a little bit, I'm protected either way. And that's the power of diversifying, especially in uncertain times, especially when things are at all-time highs, especially when the economy needs to work out some issues that it has. With that being said, we're seeing oil still hovering around 70. So if I had to get cornered on this, and that's what's exciting, right? Like, I'm not watching this video to hear how you're protecting yourself. Come out and make a call. Well, because I've positioned myself this way, I don't have to make a call, and I'm going to be all right. But if I had to, I would say that based on the price of oil and other economic indicators, that we are not in a recession. It's still ho-hum. Volatility has entered the market. We're starting to see rate hikes. We're starting to see real estate markets in some areas slow down. And we have holiday season coming up, and I think that's going to be a good indicator on the strength of this bull market. With the holiday season, if retailers continue to perform well and they have a great holiday season and oil stays reasonable in its range that we talked about, then that's going to show me that the economy still may have more to go, or could at least go sideways for a while. And a sideways market doesn't have to be a negative thing either, especially if you own dividend stocks, because they're kind of paying you to hold it, right? So while you're waiting for the next maneuver, you're getting paid to hold it. And if the market crashes, a lot of times dividend stocks perform well, or don't lose as badly. So there's some interesting things there. But I definitely think that sentiment is entering the market. We have a lot of investors that went through the last recession and they've gotten hurt, and they're really ultra conscious about any kind of move in the market. And then I feel like we have new investors that haven't experienced major recessions, and they don't know what could be coming, when it comes. And in addition to that, part of the flash crash and these big corrections, we have a lot of electronic trading and kind of AI systems that are constantly trading or doing micro trades. So there's some new layers added on here to this bull market that's going to make it really interesting to follow through. But hopefully, if you take a look at your portfolio and you are vulnerable to a recession, take a look at holding a small portion in cash. A lot of times people will advocate bonds. If the stock market does bad, bonds will do good. Not necessarily. Bonds are interest rate sensitive. There's a lot of things that affects the bond market. And there's a lot of things we can learn from the bond market, but there's no guarantee that the bond market is going to move opposite of the stock market. But we do know that if a recession occurs and everything crashes and you have cash, you can look at it like everything's coming down, or you can look at it like everything's coming down except your cash. And in a way, you can look at it like your cash position is going up. So that might be something that you may want to look at. And by doing so, you can really weather these storms and not be at the mercy of day-to-day fluctuations, and not be at the mercy of emotional sentiment, especially if you've been investing a while and you have a lot of skin in the game. You have a lot of assets hanging out there in the balance that is going to matter. You know, bad portion too, depending on how you're set up, if we do experience a recession, your portfolio could go down a lot, and for the icing on the cake, you could lose your career or your job. You know, a lot of unemployment. Companies could start laying off. So there is reason to protect yourself, and there is reason to keep an eye on this. And if you look at my channel, 3 of my first 4 videos were on recessions, and I'm constantly keeping my eye on the economy as a whole, and I look for indicators, and I look for things that might spell out a recession. So if you enjoy that, and you enjoy the theory and the concepts that I've put forward in this video, you may want to subscribe. Another reason you may want to subscribe is I do these videos occasionally, and I don't have a set schedule. So if you subscribe and hit the notification button, then you'll be alerted when I make a video. All right, until next time, thank you.